All right. Good morning, everybody. Welcome to the pre-market prep session here for April 26th, 2023. This being our daily session where we go over all the news, notes, data, as well as market conditions that will be absolutely pivotal in making sure that you are consistently profitable here throughout these crazy, ever-changing markets. I am your host, stock options expert, as well as expert market strategist, Adam Holland, and I am, ready to hit the ground running here this morning. We had a number of important earnings that happened after the bell yesterday. We've got data here that dropped this morning, I believe. So we have, a number of things as we heat up in the second half of the week that are important to pay attention to. Let's double check and make sure check what we got in terms of data. So tomorrow is really when the data heats up. So we got jobless claims data at 8:30 a.m. tomorrow, continuing jobless claims at 8:30 a.m. And then we have a number of members of the Fed speaking throughout the day tomorrow, Thursday. And then Friday, we've got, let's see here. Actually, no, excuse me. That was for last week. Where are we at? Right here. Okay, yes. So for Wednesday, we don't have that much in terms of data, but tomorrow we get GDP data as well as jobless claims. And then Friday, we get PCE data. So we get inflation data, right? So very important to recognize that we have a number of things coming up this week to keep an eye on other than just earnings. We've got earnings and data drops. So keep that in mind with whatever you swing overnight, right? Whatever you swing overnight will be risky because you've got earnings coming out, you've got data coming out, and it's a lot for the market to digest. And we could get just a lot more of what we've been seeing, which is chop, But in terms of the day here, right, make sure you drop that one in the chat when we gather here. We're trying to do one thing, and that's get 1% better, right? We're not trying to do anything amazing, do anything groundbreaking, just get a little bit better than we were when we woke up. I had a great productive morning myself, got in the full morning routine, getting back in, the running shape of things. I wish it would heat back up so I wouldn't have to be out here running, my full coat and sometimes in my gloves. But excited to be out there and be getting fit and feeling good, and that way you're already in a mindset of execution by the time that opening bell rings, which is where we're trying to be at. Let's see here. Like I said, we had a number of data pieces, but let's go ahead and dive into it here. We had Microsoft reporting, which I'm sure we'll get to. We had updates on these banks, this whole bank situation. We had some First Republic Bank updates. So I'm definitely excited to dive into what we have going on here. And without further ado, let's go ahead and get into it. So top news, another rescue, First Republic. The next few days are expected to be crucial for the fate of First Republic Bank, ticker FRC, as the White House, Federal Reserve, and Treasury are evaluating plans to save the troubled regional lender under an open bank rescue. One scenario under consideration is to create a special purpose entity with the big banks that earlier supported First Republic with $30 billion in deposits purchasing its underwater loans on its balance sheet above where they would be marked. If this occurs, First Republic may go out and raise new equity. More restructuring, the lender is also considering divesting $50 billion to $100 billion of long-dated securities and mortgages as part of a larger restructuring plan. Any sales would help address the bank's asset-liability mismatch. First Republic may offer warrants or preferred equity as an incentive to buy assets above their market value. Now, the bank is striving to strengthen its balance sheet to avert a takeover by regulators and to allow for a possible capital raise. It has been working on cutting costs with plans to reduce its workforce by 20 to 25% in Q2 and condense corporate office space. First Republic, which has been struggling with customers fleeing the bank, reported net deposit outflows of $72 billion during its first quarter, despite support from 11 of the biggest lenders in the U.S. So First Republic, right, this whole banking saga is still not over. There's still, a lot of chapters left to be written here. In terms of Seeking Alpha commentary, Seeking Alpha contributor Eugenio Catone noted that in just 3 months, First Republic's deposit structure has completely changed. Quote, despite continued Fed support, I don't see how FRC can recover. Even if it does, to believe the stock price will return close to the levels of 3 months ago is totally misplaced. He warned. Investing group leader Stone Fox Capital believes First Republic stock won't rally until the bank's flawed business model is fixed. So we're right back in the thick of it when it comes to, this banking crisis. First Republic pretty much insolvent at this point, and now we're kind of thumbing through the idea of another rescue, from the federal government. Just not looking good. It's just not looking good for First Republic Bank, but it wasn't looking good to begin with, despite the fact that, they had a bunch of support from other huge banks in the US. It just might not end up being enough. So we got to see, right? We got to see exactly what ends up going on here. But yeah, I mean, I don't think anybody here had any type of positions in First Republic Bank. It just makes it difficult because if you, had any other open bank trades that might have affected them. It looks like overall, just checking in on the finance sector, that's moved lower overnight, likely on the back of that First Republic Bank issue. So that's really what's tough here is just the fact in which, that can continue to weigh sporadically on banking plays, right? If you're making any plays on banks or in the finance sector, you could have, another one of these random, not random at this point because it's well established the First Republic was struggling, but you could have another development in this banking story that just comes in and wrecks your trade. So I think it's important to just recognize that, right? Is it something that you can fix? No, we have no control over that. But what you can control is what stocks you're trading, what trades you're involved in. So I think it's just knowing and factoring that into your expectations. Like, hey, I've got a good setup on Goldman Sachs or on Morgan Stanley or on Bank of America. But I do recognize that this bank situation is still going on. Maybe instead of getting 3 contracts, I'll get 1, right? Or maybe instead of 10, I'll get 5, right? And then that way, at least you can factor that into your expectations so that if something happens, you say, okay, I knew that this was part of the plan. I'm going to do what I can in order to compensate for that. So, just a further development here, but that was kind of as things were cooling off in this whole bank saga, they're starting to heat right back up again. In terms of tech news, big tech beats. So Alphabet rose 4% after hours yesterday as its first quarter earnings cleared Wall Street expectations as a result of strong performance in its search and cloud businesses. Alphabet posted 69.8 billion in revenues, up 3% year over year and up 6% in constant currency, while earnings per share was $1.17. The company also expanded its stock buyback plan by an additional $70 billion. Investing group leader Jonathan Weber believes Alphabet's pressured margins could improve once cost-cutting efforts pay off in Q2 and beyond. However, prior to the earnings, Daniel Sarita raised concerns over increased competition, tightening credit conditions, and the resulting weakening of its consumer base. In other news, Microsoft also surged 9% yesterday as its third quarter results surpassed estimates, indicating growing strength in its AI and cloud businesses. The software giant earned $2.45 a share on revenue of $52.9 billion compared to a profit of $2.22 a share on $49.4 billion in sales in the year ago period. Investing group leader Livy Investment Research believes Microsoft shares remain well positioned for further upside potential, buoyed by expectations for a stronger second half. However, Ahan Vashi believes the risk to reward offer is highly unfavorable. So we've got 2 big tech beats, which is great for those companies. Like I talked about yesterday, it's absolutely impossible to know what the results of these earnings reports will be. So, it's difficult to go in and play anything. If you played Google, if you played Microsoft, congratulations. It looks like at least Microsoft remained elevated. Google is likely is that open red today, it looks like. So Google, not really lasting overnight. Google is opening flat / maybe a little green, but relatively flat. And that's why, again, it's important to just recognize that it's a complete crapshoot when you play earnings. You can, companies can beat earnings, you can pick the right direction, and the stock still it still doesn't push far enough, for you to make money. So it's very important, that you recognize that, factor that in. If you wouldn't flush it down the toilet, don't play it on earnings. But congratulations, to those companies. And you have to keep in mind as well, like, is it one of those things where, like what that analyst mentioned yesterday that we covered here on the pre-market rundown, which is, do you sell these pops in preparation of what's to come in May? We don't know yet, right? We've got to see that manifest. We have to see that come to pass. But in terms of right now, right, it's one of those things where everybody kind of looks at these pops sideways because you just don't know what could come in this next month, which historically is not a very bullish one, right? So we'll keep our eyes peeled on that. But that's what at least one analyst had to say. There are tons of analysts with tons of different perspectives, and I'm not the type to count your eggs before you hatch. Like, I'm not the type to say, oh, we're going to drop, wholeheartedly, because there is no guarantee, right? There is no guarantee. We need to see that start to manifest materially. And then when it does, okay, cool, right? But until then, it's all hearsay, it's all speculation. You just want to make sure that you have that factored in as part of your expectations. You don't want to, I feel like we live in a world of ultimatums where it's like either you're this or you're that, either you're Republican or you're Democrat, either you're, pro-life or pro-choice, either you're this or you're that. There is no in between. When really everywhere else in the world except for America, there exists a world full of gray, right? Not ultimatums, but it's like in America, you're one thing or the other. There can't be any type of intermingling or in between. So it's like it's same thing in markets. People are like, are you a bull or are you a bear? I'm a whatever the heck it is the market is at the time, right? Whatever is paying me is what I am. So right now, I'm a kangaroo because the market is just kind of bouncing up and down, right? But I am what I need to be based off of circumstances. I don't have allegiance to one arena or another because that just doesn't make sense, right? The market goes through cycles of both. Why would I be committed to some team? It doesn't really make any sense, right? So in terms of going into May, do I sit here as a bear? Do I sit here as a bull? I sit here as someone who is taking in, right, all the different things that are happening and then saying, okay, I can see this playing out this way, given the history, given where the VIX is and how low it is, right? How it's at a major support area. Given a lot of different things, the shakiness of the market as of recently, right? There's a lot of different things that go into that, but it's not me saying, hey, like we're going to drop, because at the end of the day, I need the charts to tell me that first, right? And we've been very inconclusive with the candlesticks that we've been putting on higher time frames. In terms of back to our pre-market prep here, ETFs, all things equal. So the big tech earnings bonanza this week shines a light on how much influence a handful of stocks have on the broader market. Just 4 names reporting this week account for 14% of the S&P 500. That is so important to note. When we were in the beginning of 2022, January of 2022, there were only a few stocks that were going up. It was all of the big tech stocks. None of the other members of the S&P 500 were going up, right? So I think it's really important to note, because once those stop going up, what happens? The market stops going up. When big tech tanks, the market tanks. So what you need to be doing is looking at, okay, what is affecting big tech, right? What of these moves can affect big tech? And when that happens, right, like the increasing of interest rates, which people, just didn't care were going to happen in 2022, and it caused that major sell-off that we saw. You need to make sure that you're keeping in mind that these things move markets. So when we see, earnings from Microsoft, earnings from Google, earnings from Apple, those things can affect how we move, right? Let's see. And there may be a case for avoiding that kind of huge weighting, giving the performance of the Invesco S&P 500 equal weight ETF RSP. It's up nearly 470% in the 20 years since its inception. Note that the ETF contains an equal weight of each of the S&P 500 holdings within the fund. So that's basically just SPY, right? SPY, VOO, IVV, all those major ETFs that represent the S&P 500, they're weighted a certain way. So Apple holds more weight, meaning that it's more like, let's say that I have, 100 shares within this basket, right? Then weight means I have 50 shares of Apple, or, I have 25 shares of Apple, 20 shares of Microsoft, 17 shares of Nvidia, and then I have like a half of share of Coca-Cola. And like, it's like you have different weights, you have different, what's the word that I'm looking for? Like concentrations of stocks within that ETF. And SPY is heavily weighted toward tech, right? Toward big tech. So big tech plays a bigger role in how SPY moves. There are other ETFs, right? Like this one, RSP, where everything that's in it is weighted equally. So if there's 500 things in it, and then it's one share of 500 different stocks, and they're all weighted equally. It's not like they have more of one versus another. So if that's something you want to look into, awesome. At the end of the day, though, I mean, I love SPY, love VOO. I'd stay there, right, in terms of taking advantage of all of the big movement. Like, I don't really care for minor growth. In terms of healthcare news here, targeting drug makers, Senators Bernie Sanders and Bill Cassidy said said that a bipartisan deal has been reached to advance legislation that will lower prescription drug prices and reform pharmacy benefit managers. The Senate Committee on Health, Education, Labor, and Pensions will hold a markup on 4 bills on May 2nd. The pieces of legislation are S1067, ensuring timely access to generics, Act of 2023, S1114, expanding access to low-cost generics, Act of 2023, and S1214, retaining access and restoring exclusivity, Act. And the Pharmacy Benefit Manager Reformed Act, S1067. I don't know why they mentioned like the details of each bill, is designed to stop pharma companies filing petitions to delay generics from hitting the market, while S114 makes changes to the 180-day exclusivity for generic filers that are the first to challenge a brand name. Wow, guys, struggling with the reading this morning. Are the first to challenge a brand name drug's patents and meet regulatory requirements. So it just looks like this is just, kind of two senators getting together, one Republican, one Democrat, and they're looking to combat, these drug makers. They're looking to, expand access to low cost generics, expand timely access, and basically stopping these big pharma companies from like hampering the ability of these generic drugs to hit the market. So, I think that's a great thing. Healthcare in the US, it's tough because healthcare elsewhere, right, is like a basic right, but it also kind of sucks. And then it can take forever to get seen or get medicine or get anything, right? And this is not me judging this from the outside looking in. This is from firsthand testimonies of people who live in the UK, right, in different countries, who try to get their hands on medicine and they struggle. So it's tough because private medicine sucks in that, it's going to be used to milk, money from everyone who needs their medicine, but it also, can get access to it if you're willing to pay for it. So it's tough. It's a trade-off, right? But I think that this is great, kind of expanding the access that people can have to generics, especially since now there's so many great generics that are dropping. The RARE Act seeks to clarify a law following a 2021 court decision last month. Senators Maggie Hassan and Mike Braun reintroduced legislation aimed at ending a loophole that at least one pharma company has used to block competition. So I think this is one of those things that just adds on to like kind of the pulse of a sector, but not really directly impacting materially movement in that sector. When we look at like pharmaceutical companies and things like that, I don't think that this has a material impact on those tickers this morning. It's just something to keep an eye on because it could open the door to, if you're a big pharma sector trader, which I am not. I know people that exclusively trade, pharma, big pharma and stuff like that. You have to stay plugged into news like this, but that's not me. And that's not really a lot of people on here. Those people typically have to stay plugged into Twitter, plugged into rumors, kind of plugged into all the little happenings because a drug can get certified and a company's stock runs and then a company's stock tanks, right, overnight. So when you're playing in that sector, you got to be make sure that your hands on. But for us, this is kind of like, okay, this just speaks to kind of what's going on in the sector and we can continue to move from there. But it's not a huge thing in terms of like price action ramifications right now. In terms of today's markets in Asia, Japan we're down 0.7%, Hong Kong we're up 0.7%, China we're flat, India we're up 0.3%, the FTSE in London down 0.3%, Paris down 0.9%, Frankfurt down 0.6%. Let's see where we're at on like SPY and all those while we're reporting, because it looks like at the time SPY was up. Are we still up? Looks like we're still green from where we closed, but not much. So I'll still go ahead and read those. It's like Dow down 0.02, basically flat. I don't know what the point is of reporting negative 0.02%. S&P up 0.3. I don't think that's the same anymore. NASDAQ up 1.2. That's Microsoft right there. Crude up 0.4%. Gold up 0.2%. Bitcoin up 5.7% to 28,863. So it must have fell and then shot back up a little bit. In terms of today's economic calendar, retail inventories at 8:30 a.m. We got those. Yep, nothing really big that we get in terms of data. It's all just earnings really that are happening, kind of after the bell, and data that we get tomorrow morning and then Friday morning. So those are going to be, the really important days here. Thursday morning, Friday morning. So we're heating up in terms of data going into the second half of the week. Make sure that you're aware of that. We also have who else is reporting? I think it's Meta reporting sometime soon. Let me check them out here. Looks like Meta also got a nice little pump from Microsoft and Google. Meta reports after the bell today. So Meta will also be reporting today. We'll see what we get out of Meta. Again, a number of job cuts coming out of that Facebook camp. Now, that is pretty much it here. We're actually, no, we're going to finish up with a rapid fire bullet point rundown. So, what else is happening? Bipartisan bill set to block children under 13 from accessing social media. Yeah, I mean, I'm torn, but also like kind of in favor. I just think social media is just so toxic. Like, I think it's just so, like, it can be a great place to learn, but like adults can't even really tailor themselves when it comes to social media. Like, I'm just starting to use social media for what it can be used for in terms of like goodness. Like, I barely go on my personal account, but it's like whenever I am on my personal account, you just sink back into that, just like, just the thief of joy, right? I feel like it can just be a thief of joy sometimes, social media overall. And I couldn't imagine if that shaped really how I grew up, like much more than what it did, especially nowadays with the pressures of, kids being famous and this and that and looking like a certain way. And I mean, that's just tough. It's tough. So, I don't know if I have a stance on that personally. I probably won't allow my child or children to use social media until they're like probably high school. Like, I just think it's not, I don't know. I don't know. I don't have kids. I don't have kids, so it's tough because I haven't had a kid beg me to get on Instagram. But it's tough, right? It's tough. To all my parents out there, I salute you, right? We'll see. The situation might be a lot easier if this bipartisan bill comes about to block children from accessing social media. Of course, if kids want to get something done, they're going to get something done, right? We've all been kids here once before, so at the end of the day, they're still going to get on if they want to get on. It's just a tough deal all the way around with socials. Alibaba, ticker BABA, leads Chinese tech losses as senators call for cloud sanctions. McDonald's, ticker MCD, shares reach all-time high again as consumers lap up higher prices. Yeah, I went to McDonald's over the weekend and I went and got a meal, and the meal was like $10. And normally I don't like pay attention to those things. Like, I'll go out and I'll get something and I'm like, oh, okay, but like, I heard that and I was like, man, went to McDonald's meal just for one, end up being $10. But hey, I guess they're capitalizing on the fact that people just don't notice. Also, if you don't specify anymore, they give you the large fry. I did notice that, right? So yeah, Malviata can be very toxic. It can. But yeah, I don't know if you guys noticed that too. Maybe you don't frequent them as much as me. I try not to frequent them a lot. I'd say every few weeks. But now they automatically give you the large fry if you don't specify medium fry. So I feel like they definitely have, it's kind of like us trading in markets. We have like a handbook for volatile markets. They have a handbook for inflationary markets, right? Give out less food. Make sure that you automatically charge people the higher amount if they don't specify, and raise prices, right? That tends to be how things go in the food industry. They have an actual playbook for that, right? In terms of restaurants and stuff. If you notice, they give you less meat and they'll pair it with more things like potatoes and things like that to keep you fuller. So you start to see a lot more loaded fries, but they're not really loaded, right? What used to be a lobster roll, now it's lobster fries, but it's much more fries than it is lobster, right? So everybody has their own little game plan, which means that you need to make sure you have your game plan for inflationary times, recessionary times, etc. If you don't, hit the link in bio, right? Let's hop on a call. We can figure it out. But this is the time where you got to have a game plan. You got to be ready to pivot. Now, Chipotle, ticker CMG, climbs 4% after comparable sales sizzle in Q1. Margins improve. Chipotle, I mean, they tend to always beat. I mean, they just do a great job over there. GSK, ticker GSK, revenue dragged by lower COVID product sales. Fiscal year outlook affirmed. Visa, ticker V, Q2 revenue and earnings top consensus amid strong cross-border volume. Pac West, ticker PACW, jumps 14% as Q1 earnings beat expectations and deposits stabilize. In-Phase Energy, ticker ENPH, plunges 15% after guiding Q2 revenue below consensus. SQM, ticker SQM, and Albemarle, ticker ALB, hold talks on Chile's lithium nationalization plan. And then President Joe Biden touts construction jobs as re-election bid kicks off. So that will wrap us up here for the pre-market prep session for 426, 2023. I'm not gonna lie, that got me a little hungry. I'm sitting here drinking this get the app. There's always deals. I know. You know what's funny is that the last time I pulled in there, they asked if I'd be purchasing with the app, and I was like, no, I'm not purchasing with the app. But you know what, Tristan? Maybe I now need to go in and purchase with the app. To be honest, y'all kind of messed me up because not you guys, but I guess the session, because we've been talking about all this food, and now my stomach is growling, and suddenly this little protein shake is not seeming as appetizing when we're talking about Chipotle and McDonald's and all this other stuff. Now I feel like I need some food I can chew. But look, we're our best selves, right? That's why y'all are here, to keep me on point, right? We can keep each other accountable. I won't be going out to McDonald's, right? I'm declaring that right now. I won't be going across the street to Chipotle, right? In Jesus' name, right? We're all claiming that right now. Adam needs to get that under control, right? Not make sure he throws that 3 miles that I ran to waste, right? Feeling like my lungs are on fire. Didn't do that for no reason. But yes, as always, right? Hopefully you guys got something valuable out of this session. I think you did, right? I tend to be pretty confident in at least that. And if you did, just show love to the account. That's all I ask in return, right? Reels posted every day, education posted every day. Check those out. They, give you a lot of great insight, and you can see visuals along with them. If you like the visuals, if you like the edits, throw some fire emojis, show some love. I appreciate it, right? People always hit me up. They're like, I love the new videos. I'm like, tell me, let me know, because I have no idea, right? And then I stopped doing them. People are like, why are you doing the videos? I didn't know you liked them, right? I didn't know you liked them because you didn't let me know. So you got to let me know, right? If there's content that you like, content that you don't like. If you're like, hey, more of this, less of this, cool. Let me know, and then that way I can help you out. But you have not what you ask not, right? If I don't know and I suddenly say, hey, you know what? I'm going to go off and ride off into the sunset, right? You say, Adam, where are you going? Listen, guys, you got to let me know, right? Two-way street. So let me know. And I appreciate it as well. Everybody have a great rest of the day. I'll see you back here tomorrow for our next pre-market prep session. That's going to be the last one of the week. I believe so. I'll have to see what my schedule is looking like on Friday. But just in case, right, letting you guys know. Have a great rest of the day. I'll see you back here tomorrow. Peace.